Hello guys, good afternoon. This is FTS once again. I am not a financial advisor, neither do I give financial advice. This video is for educational purpose only. And as you know, past profits do not guarantee future results. The forex market is volatile. As you take your trades, apply risk management, right? So this is a new trading week, right? So I'm doing this weekly market reviews for gold, dollar, euro, GBP, and the Japanese yen, right? And I'm not able to analyze this from the fundamental perspective and also from the technical perspective, right? But mainly from the fundamental perspective, so that you know why uh some particular currency pairs are moving in a particular direction, right? So I'm an advocate of fundamental controlling the market, right? Determine market sentiment, market bias, and it drives market volatility, and institutions and market makers, that is what they use, right? Yeah, they most of these institutions and hedge funds, they don't even know these complex jargons from technical analysis that we retail traders are trading, right? They just price in based on key macro data, right? When I mean macro data, I'm talking about interest rate, inflation, GDP, and unemployment, right? Yeah, they trade based on this because these are the things that it determines the strength or weakness of an economy, right? So if economy is doing well, the macros would at least support it, and if it's not doing well, the macro will also be against it. And as a trader, this is how you ought to trade the market. So for this week, right? Tomorrow being 11th of August 2025, right? So investors will remain focused on trade tensions, watching for any progress towards the US-China agreement before the August 12th deadline, right? So US and China will likely conclude their tariff negotiations by on Tuesday, right? So after which tariffs exceeding 100% could be imposed, right? So this tariff tension would likely be imposed, right? So geopolitical development will also be in the spotlight as President Trump and Putin are expected to meet soon to find a solution for the conflict in Ukraine. In the US, key releases include CPI, PPI, retail sales, industrial production, and preliminary readings of the University of Michigan consumers sentiment, right? Then globally, attention will be turned to China's industrial production, retail sales, and new yuan loans. For Eurozone GDP, for Eurozone GDP, Germans use zoo economic sentiment, Japanese preliminary second quarter GDP, inflation data from India and Brazil, and a busy UK pocket with GDP. Labor market, industrial production, and trade figures, right? RBA, Reserve Bank of Australia, will lay announce monetary policy, which is on Tuesday. So if you go to the economic calendar, all right, so this is the economic activity for the week. So tomorrow will be Monday. There is nothing much, right? So no key economic activities on Monday, as we can see from here. Then on Tuesday, the ROBE, Reserve Bank of Australia interest rate decision. Then on that same Tuesday, we have the inflation data for the United States, right? Yeah, we have inflation data for the United States. Then on Wednesday, crude oil inventories and German CPI. Then on Thursday, we have GDP month of month, year of year inflation, right? Yeah, then initial jobless claim for the US and PPI, producer price index for the United States. Then on Friday, we have core retail sales, month of month, right? So this core retail sales is also important, right? Yeah, so core retail sales is a tool used by the Feds to determine if the inflation is going up or if inflation is coming down, right? So this is a key economic data, right? Now let's go to the chart to know why some currencies like the dollar, gold, GBP, euro, and yen, why do we bullish or bearish for this week, right? So I think we'll likely start with the United States dollar, right? Yeah, well, let's start with United States dollar. So, as we all know, last week, upper week was NFP, right? First of August 25, and the data that came out upper week was below market expectations. So the dollar was bearish. Last week the dollar fell massively last week, and the bearish dollar will likely going to continue, right? Say the US dollar is facing downward pressure due to several fundamental and policy driven factors. Number one, rate cut expectation. We saw that rate cut was moved to the month of September, and we can confirm that from the Fed rate watch too, right? Yeah, we can confirm that from the Fed rate watch too, and it's going to be by 90 basis points, right? So they'll likely cut rate three times this year. So the market is not pricing in aggressive rate cut, totally the 90 basis point lower interest rate reduction in the dollar yield, right? Advantage over other currencies, right? So they're pricing. So there's a rate cut in the month of September, which is going to be key, right? So investors have already priced in for a rate cut, right? That means they already devalue the United States dollar. That's what it means, right? So if you can confirm that from the Fed rate watch 2, this is the Fed rate watch 2. So this is where we know if they will likely cut rates, if they're hiking rate, or if there's not going to be a change in interest rate, right? So from what we are seeing here, it's 8.9, which is almost 90%, right? For what the data I gathered there says 90%. So there's 90% chances that they will likely cut rate by September, right? You can see 89.9%. Why no change is 11%. So we'll likely see how many times they will cut rates. I think they'll likely cut rate I think 75 basis points, 60 basis points, like three times by September, October, and December, which is 25 basis points each. So before this year runs out, the United States will likely, there's very tendency that they will likely cut rates three times, September, October, and December, right? So we're expecting a rate cut for the United States dollar, right? So another reason why the dollar will be weak, why the dollar is weak and the dollar will continue to be weak is because of the NFP data, right? So what came out last week was 73,000 jobs, right? Yeah, that was added against the market expectations of 100,000, right? So because of this, Trump had to fire the Bureau of Statistics head, right? Trump fired her because he said that the lady is trying to make sure that his government is not going well. Let me say Trump fired her due to political reasons, right? So with that, it shows that another reason why we see that the dollar is bearish, right? The another one is rising signs of signs of tariff-driven inflation, right? So Trump has swinged into full-fledged implementation of tariffs, right? And last week as well, Trump is also trying to place tariffs on gold, right? Importation of gold, those that are selling gold, and it's going to be 100%, right? So because of this fear, investors are afraid to invest in the United States economy, and so the return trade policies have risen fear for tariff-related cost pressure. While inflation might temporarily rise, and this is viewed as negative for growth, especially if higher costs squeeze customer spending and corporate margin. So the Fed may look through this inflation spike and focus on supporting the economic via rate cut. So this is another reason why the inflation, the United States economy will be affected, and it's been bearish because of what rising signs of tariff-driven inflation. Right. Another one is a nomination of a dovish Fed member. So a headline that says Trump would likely shop for a new Fed chairman, and here it's saying the summary of the information says that Trump will nominate Steve Miran for the seat of federal board for the first board of governors that expires January. So saying in the meantime we will continue to search for a permanent replacement. So according to Evercore ISI analyst Macro Satrigeti and Gangliu, by selecting Mira. So Trump has made a stopgap appointment and giving himself until January to make the main call. So till January, Trump would likely shop for a new Fed chair, right? Yeah. So Mira support Trump push to cut rate, right? So that's why I say a dovish dovish support, right? And his nomination is seen as a signal what Trump wants from the central bank ahead of the choice to succeed power, right? You can see that the person that Trump wants to bring in is someone that would likely support his view, right? So nomination of what a dovish Fed member in the governing board, right? So that is what is still, and when this rate cut will likely happen, when this man is nominated, the United States dollar will likely be devalued, right? So these are some of the reasons why the dollar will be bearish, right? And this political involvement in Federal Reserve share, Federal Reserve, the Fed is supposed to be an independent body, right? It's not something that a president or anybody can influence, but from what we are seeing, Trump is influencing Fed massively, right? Trump is massively trying to influence the United States Fed. That is exactly what he's doing. So you can see that increased political pressure on the Fed decision-making process create uncertainty about policy what independence, right? So this has definitely affected the market. So there was a time, I think sometime ago, where Trump made a clear cut or call on trying to replace power. The market, the United States dollar had a bearish market outlook, right? So since he has been selecting, he's trying to shop for the temporary replacement, right? So he's looking for a dovish. Dovish means something that when the market is going down, not hawkish. Hawkish means when the market is going up, and dovish when means the market is coming down. So a dovish failed me or somebody that is supporting his own call. So this is a political. Trump is not playing politics with Fed chair, so which is not good for the United States. So these are the five reasons why the dollar will be bearish for this season, right? Dollar will be bearish for this season. So take note as a trader. If you know why you have to sell dollar, you cannot be buying dollar at a particular time. At this particular time, it is wrong to buy the dollar. So any analysis that we are going to take is for us to see how we can lightly sell the United States dollar. Right? So this is the Japanese yen. So for the Japanese yen, uh, the bias for Japanese yen is going to be a short-term sell. That is it, right? So we're expecting a short-term sell for the Japanese yen, right? So we can say Japanese yen is somehow short-term sell. Why? After which the yen will likely peak again, right? So although Japanese yen inflation dynamics have shifted, the yen faces a near short-term short-term headwinds, right? So more hawkish Japanese tone, but no immediate hike, right? So they will the hike rate in, I think, towards the end of this year, but there's no significant announcement here, right? They will likely hike. So the Bank of Japan has adopted a more hawkish tone, acknowledging persistent inflation figure above 2% target for 3 consecutive years. However, policymakers are signaling they are not ready to hike rates immediately, especially the Bank of Japan chairman Kazuo Ueda. So this delay means yield differentials with other major economies remain wide in the near term, keeping pressure on the yen. So we're expecting a short essay for the yen. Then inflation expectation is firm, right? So it says inflation expectation remains elevated, elevated fuel by global uncertainty, rising import costs, and domestic wage growth. So why this is supportive of future rate hike? Bank of Japan Shema suggested that the market may not see the immediate benefit for the yen, right? So potential rate hike will later this year. So these are the reasons why the yen will face a short-term sell, right? Yeah, but nevertheless, right, when I'm going to do the analysis on the chart later, at least we'll see some more details into it, right? So let's go to the euro area. So say the euro is finding strong support for multiple fronts. One, divergence from United States monetary policy. Right. So last week we saw that Euro concluded their tariff and all of that. Right. So against the 30% tariff, it has reduced to 15%, and in terms of divergence of monetary policy, right? With the first moving towards rate cut, EU maintain a more cautious stance, right? So they are not hiking rate. So their interest rate that came out last week was sticky, right? So they're not going to hike rate now, right? So because of that, because of interest rate differentials, right? United States is likely going to cut rate. Why theirs is what is sticky. So because of that, the euro have a stronger uh tendency to be bullish. Right. So resilient economic data, recent Eurozone PMI and consumers confidence data have been better than expected, reducing fears of deep recession. Right. So positioning flows. Investors are rotating away from the dollar towards currencies with stronger fundamentals and less aggressive market outlook. So why for the dollar, right? Like USD card, like USD USD card, we're going to be bearish. USD CHF, we're going to be bearish. YGP USD, we're going to be bullish. Euro USD, we're going to be bullish. Aussie USD, we're going to be bullish. On Kiwi NZD USD, we are going to be bullish. That is what it is, right? Yeah, so take note. Then for gold, because gold is negatively correlated to the dollar, right? So as the dollar is selling, gold will likely buy. So we are bullish on gold. On gold, we are going to be bullish, right? So we expect that, and that is what it is, right? Then for GBP, for GBP, we're going to be bullish as well because sticky inflation for the UK, right? The inflation data that came out last time, um, is it okay? Just a minute. Let me check something. Okay, I can check it from here. Okay, this GDP, yeah, inflation report that came out last week was sticky, right? Yeah, it was sticky. That means it did not change, right? So they are likely not going to hike rate soon. While the United States is, investors are already priced in for rate cut, right? So the UK economy, they are not going to cut rate, right? So a stronger wage growth. So the higher wage support household spending and maintain inflation pressure, reducing the urgency for rate cut, right? So now we are discussing interest rate differentials here. United States is cutting rates. Euro, they're not cutting rates. GBP, they are not cutting rate, right? Yeah. So then the JPY, they are not likely to hike rate now, but in the nearest future, they'll likely hike rate. So in terms of interest rate differentials, the dollar is on the bearish, while the every other currency pair against the dollar is going to be bullish against the dollar. Then relative policy advantage compared to the United States, UK rate cut path looks more gradual and supporting the pound, right? So you can see that rate cut is supporting is likely going to support the British pound, right? So let's go to analysis. So this is the dollar, right? Yeah. So for the dollar, yeah. So this might likely we might likely expect a retracement to this level right here. Because this is sorry, I don't know what I wanted to use. So we're expecting a retracement back into the zone before before we might likely before we might likely uh push price to the downside, right? So if we find this area on 45 minutes, so you can see, right? So 45 minutes, you can see where I mark this place. So this is where I'm likely going to take my, so we'll likely wait for price to get into the zone, then we'll push price to the downside, right? We'll likely push price to the downside. So this is going to be the likely level, likely target, right? Yeah, we'll likely target this level. Okay. Likely target this level, and yeah, we're seeing this low, right? Yeah. Yeah, well, I see the break of structure close to this uh other block, right? Yeah, so this is other block will likely target, right? Because we have fair value gap here, right? So this is a valid other block, okay? So this is a valid order block and this is a fair value gap. Uh so this is the daily time frame order block, and this is the 45 minutes order block, right? So these are the places I'm likely looking out for, right? We don't really trade this right here, but some brokers do. But what I'm doing this because if you can get these dollar index right, if you can get the analysis very well, that means you can likely analyze every other pair, right? Yeah, so for me, I will likely wait for price to get in here, and then I will likely sell to the downside. So this is my analysis for the dollar index, right? So once price gets here, right? Once price gets here, this is for 5 minutes, right? So just some push, right? Prices once price gets here, I should be waiting to to buy gold and buy GBP USD, buy Euro USD, buy AD USD, buy NZD USD. That is what I'm trying to say, right? Because I'm using the dollar index, to scale every dollar pair, the major pairs, right? So once I get the dollar index right, every other thing fall in place. For USD JPY is going to be bearish, right? Yeah, for USD JPY going bearish. I think we are still on this trade is still on, right? Yeah, this trade is still on. Okay, this trade is still on. Let's put that way, trade is still on. But for this week, right, I'm trying to push this narrative to us, right? So this is what it might likely be. Okay, so for M45, this is what I'm looking for. Why for the yen? Right, like I said, the yen, we're looking for the yen is going to be a short sell, right? Yeah, a bearish analysis, a bearish one for the yen, okay? Bearish move for the yen, right? Bearish yen is still going to be bearish, okay? So for these days, we are looking at this other block, right? What to look at for this? Um, let's look at for this zone. This one. Mm. Let's look out for this and let's look out for this and for price to come here and a push to the downside, right? Yeah, price to come here and a push to the downside because this is H4. If it was for 5 minutes, I would have used this level, but I'm using here, right? Yeah, because it's H4, so this is the there. So when price gets here, we'll likely buy the yen pairs, right? Buy the yen pairs. All we know that United States against the Japanese yen, though both of them are bearish at the moment, right? So when price gets here, I would likely buy CAD JPY, AUD JPY, CHF JPY, Euro JPY, GBP JPY, right? Yeah, GBP JPY. I would likely buy them. As we all know, Euro is bullish, GBP is bullish, right? And JPY is just short-term bearish, right? So if I'm trading JPY, so whenever price gets here, I would likely sell, I would likely buy the GBP JPY, Euro JPY, CHF JPY, AUD JPY, CAD JPY, right? Yeah, I will likely buy all the JPY pairs, right? That is what I'm trying to say. When price get there, I will likely buy all the JPY pairs, right? Yeah, therefore gold, we are still on this analysis. So gold is still choppy. For times gold is choppy. So for me, I'm still waiting on price to hit this level before going up, right? So I'm still waiting for gold, right? I'm waiting for gold for price to hit it. So this is a very good confirmation. So all right, for price to hit here. And you can see every other block here had been mitigated by long candles, and you can see this is the only one that's still this other block has not been broken, so I have not been tested, right? Yeah, so let's wait for price to come here. So for me, for gold, I'm still going to be bullish on gold, but a little bit retracement because if you look at the dollar here, right? I said the dollar will come here. So when the dollar gets here, gold should also do its own thing by coming to the downside before going up, right? Yeah, so that is it for me on that, right? For USDJPY, this thing might not really hold again per se. Yeah, this might not really hold again because the dollar might likely, let me see from here. Okay, it's H4. Let me go to H1 and see the next level. Price might likely go to, it's far, man, this is far. Oh no, this is far. Except we'll likely use this FVG here, right? Unless we'll likely use this FVG here, okay? Unless we'll likely use this FVG at this point to make it, let's likely use this FVG, right? Yeah, because price at the middle of nowhere, right? Yeah, so this analysis might likely not hold, let's say, but let's see, let's see, let's see, let's see, let's see, let's see. So price might likely, I think I might cancel this. I might not really make use of this because of the bigger picture I'm seeing from there, because it's bearish, right? So and dollar index might likely do retracement into this level before coming down, right? The dollar index might likely do retracement to this level before coming down, okay? Yeah, might likely do that. Also, it can use this also, but let's say you might use this one, but I'm still saying that the dollar index might come to this because if you look at it from the daily time frame, that is where I'm really seeing the market from here, right? So this is a very good one. The price will just do retracement and you know head to the downside, right? So that is why I chose that place, right? That's why I chose that place because of what I saw here. All right. Mm, so so I'm seeing price coming here. So if within the week, we have economic activity within the week, right? So this might be the push that the dollar index will definitely need, right? Yeah, this might be the push like on Tuesday we have core inflation year of year. So this might be the figure that the dollar might need to push price all the way to this up before coming down. You understand? So on Tuesday, the high parties might likely trigger the dollar, right? It might likely trigger the dollar you know, to go up a little bit, right, before coming down, right? Yeah, so don't be surprised, right? So that is what I'm really looking for, a push to the upside before continuation to the downside, right? Yeah, so I think since we've gotten the analysis for the dollar, right, every other pair we can analyze them on our own. Because for me, I just want to analyze this major pair, right? So we can all these other ones, I think we can do them on our own. Yeah, while for those in my team, I'll likely go in details to try and see how I can structure out everything for them for them to trade, right? So that's it for me this week. So in uh in all of what I've said so far, okay, the dollar is still bearish. Japanese yen is short-term sell. GBP, yeah, GBP is bullish. Euro is bullish. Gold is bullish. Right? Yeah, I think I will also try and drop some setup within a week, right, for us to trade and get along, right? So that's it for me this week. So if you have not subscribed to my channel, kindly subscribe, like, and comment, and also make sure you also share so that others can also see the beauty of fundamental analysis in the forex market. Like I said, no strategy is more powerful than the other, right? So the most important thing is that any technical analysis you could master, please hold it very well. Then combine it with fundamental analysis. That is all you need to be profitable in the market. Apply risk management even as you trade the forex market, right? Don't over leverage your account because whenever you over leverage your account, you will likely blow your account easily, right? Yeah. So that is it for me this week. Have a lovely day ahead. All right. Thank you and good day.